Welcome to the Political Risk Podcast, an independent podcast focused on geopolitical risk to serve decision makers in specialty insurance markets, reinsurance, and beyond. I'm your host, David Benyon. This episode features two interviews I did at the recent GAIF conference. That's the General Arab Insurance Federation that took place this year in Muscat, Oman. The first of the two interviews isn't focused on the Arab world at all, but rather on South Africa. Carla Jordan is CEO of Santam Specialist Business, the London-based entity responsible for business development for the Santam Group specialist companies. Santam is a large South African non-life insurer. Carla is also the CEO of Emerald Risk Transfer, a subsidiary of Santam, based in Johannesburg and one of the leading MGAs for the African continent, with gross written premium in excess of 3 billion South African rand. In our conversation, we discussed the South African riots that took place in 2021 and their effect on South African political violence insurance business. We start by talking about the country's upcoming elections, which are set for the 29th of May 2024, when nearly 28 million voters will choose the representatives to South African national and provincial parliaments. The governing political party, the African National Congress, the ANC, led by President Cyril Ramaphosa, is under pressure due to the country's economy, high unemployment, poverty, and violent crime. Some polls suggest the ANC could get below 50% of the vote for the first time in the 30 years that it's been in power. That's since it first came into office under Nelson Mandela at the end of apartheid. Of course, the ANC might still scrape a majority in May, but there's a good chance the elections could lead to a power-sharing coalition, which would be an unprecedented situation for South Africa, leading to great political uncertainties. Either way, South Africa will continue to be a hotspot on political risk maps, as Carla acknowledges, and the uncertainty of that only contributes to its place as a political risk to watch for 2024. Over to Carla.
If you look at the Aeon political map, I think South Africa is still dark orange or red, or I think most of Africa is orange and red, to be fair.
Angry shades
of orange and red, yeah. Certainly not green. I think only Greenland is green at the moment. I think the rest of the world is a bit all over the place. But I think on the ground, South Africa and South Africans are very resilient people, and I think whatever's going on in the country, and there's a lot of other problems, not just geopolitical problems, but problems around power and load shedding, which I'm sure are also well documented around the world. So that's one part of it. It is elections this year in May. So the run-up to elections is always a little bit of political manoeuvring. But do I think there's going to be a repeat of the July 2021 riots? Well, I certainly hope not. But, I think in most of these countries that are a little bit politically driven, it's very hard. I don't think anybody could have ever predicted the July 21 riots. It sort of came out of nowhere. And I think that's almost the case for a lot of these things that happen throughout the world. It's not driven by one event, but sometimes a combination of events that drive people. This one, the July 21 ones was really incited out of social media. Is that something that could happen again? I mean, I don't know, but it's quite possible, isn't it? But I hope not. And I think South Africa is hoping for a calm election. And in the past, elections in South Africa have never really incited any violence. So I think, at the moment, I think it's as stable as it probably could be. As I say, there's a lot of political manoeuvring, but I think that's quite common in most countries. But South Africa is a democratic country to the point, it has an independent voting board and quite a few political parties. I think the ANC are still dominant regardless of perceptions. And there's not really a clear number two. And the other political parties, even if they come together, their outlooks are quite different. So it's quite hard to bring them together in a cohesive manner. Creating alliances and that is quite difficult with the opposing parties because they are just so different in their outlooks and beliefs.
I asked Carla for some background about Santam as a South African insurance company.
So Santam is the largest non-life insurer in South Africa. They have a market share of about 24%. They have different pillars within their business. A large part of the business is South African personal and commercial lines. They have a treaty arm, which is Santam Re, and the part that I'm here representing as Santam Specialist Businesses, which represents sort of the MGA model within the Santam Group. So corporate property MGA Emerald, have an engineering MGA Mirabilis, and a casualty one, SHA, and then a few smaller ones including Santam Marine Aviation. There's a travel company, TIC, heavy haulage, and a taxi business, boom.
And also with regards to political violence business.
So yes, the PV business is written under the Emerald banner in the corporate property space. They have a facility that writes PV business, cover holder facility through Lloyd's actually, that writes and holds their PV book, which is actually because you have Sasria in South Africa, which is the local insurance company that writes civil commotion, SRCC type business up to a limit within Sasria. Emerald provides, through their PV facility, a wraparound, sort of a right wrap around Sasria, sort of excess limits. The PV book is purely a South African book in the Emerald environment. And because of the business that Emerald does, it's a corporate property underwriter. It's more the large corporates that they would have on their books, quite a few large retail groups and that sort of thing.
Chile was another country that was convulsed by civil unrest in the same period, 2019 to 2022, which is sometimes lumped in insurance conversations anyway, particularly for political violence, in terms of the growth of the standalone market from SRCC exclusions from property all risks. I asked Clara about whether these parallels were useful or not, and what marks out South Africa's market as different.
So it is a little bit different because in the South African market you have Sasria, which is a state-owned entity which was set up after the riots of 1974. So there was always a mechanism specifically for SRCC. So it was always excluded from your assets risk policies, and that's why we had the wraparound cover. So Sasria had up to a certain limit that they could buy a Sasria coupon for, and above that then Emerald provided a facility that gave clients who required additional capacity for PV to buy outside of that Sasria cover.
Clara explained the context as well as some of the consequences of the 2021 riots.
So it began really with the former president of South Africa, Jacob Zuma, was in the process of being indicted on a number of allegations against him and was sent to prison or on the verge of being sent to prison. And it was alleged that the incitement for the riots was driven by some of his family members on Twitter. And those allegations, all of those things, I don't know how much of it has really ever been proven. But that certainly, it started there, inciting people to violence to stop him having to be imprisoned. And it grew arms and legs very quickly. Unfortunately, the policing was ineffective. It was in quite a small area, in KZN area. It wasn't initially throughout the whole of South Africa, and depending on how familiar you are with South Africa, the KZN is sort of a 6-hour drive from Johannesburg and a 12-hour drive from Cape Town. So it's not that all of these things were concentrated or spread out throughout the country, but certainly in KZN it was a very rough few days. The police were largely ineffective in controlling it. There were, I think, about 5,500 people who were injured as a result of the riots, and about 300 fatalities, if I'm not mistaken. I mean, I'm not 100% au fait with the numbers, but it was a big event by any manner or means. A lot of looting and violence and, stuff that, as a South African or as a person, living in South Africa at the time, something that I'd certainly never experienced before. A lot of levels of fear in the communities, and if you read reports at the time, people, in KZN specifically, civilians blockading the entrances to their communities to stop the looters getting into their communities and potentially raiding houses and things like that, because it was getting out of control. It did take the government about, I think, 3 days to deploy the military, which also sort of delayed the stopping of it, to be honest. So I think from a large corporate perspective, I think that the companies that were badly affected by it in terms of insurance claims, they won't let that happen again. A lot of them have increased security and their responsiveness to situations like this. But I have to also believe that the government wouldn't allow it to escalate to the point that it did in the past before they deployed the military again. I think sometimes when people are afraid to make decisions, it almost leads to a bit of a state of inaction. But it was a bit of a scary time for people all over South Africa, because there was a little bit of looting and violence that started happening in certain parts of Johannesburg, the Johannesburg area, Gauteng. But luckily that was contained quite quickly. But, if it had escalated into Johannesburg, I think that would have been a lot more populated and a lot denser living conditions. Could have been a very different outcome. And then you asked about obviously Sasria, who is the local sort of SRCC rights insurer, and you can read their own. They actually have made a movie about it. I think it's available on YouTube, about their experiences through it. So I think it would be really worthwhile. So their experience is well documented, but it was almost catastrophic for them as a company. And the government did help them out in terms of funding and that, to make sure that they could get through that as a state-owned entity. They are a state-owned entity.
More specifically, she moved on to describe some of the effects for her business and for the South African PV market.
From an Emerald perspective, yes, we had a lot of claims. I put a lot of pressure on our claims people in particular. But everything was managed quite well. I think they are left with about 15 claims now out of the process. So we're almost 3 years down the line now. It's gone so quickly. But definitely changed the landscape of the PV market in South Africa. And for good reasons, I suppose. A lot of knee-jerk reactions out of the London market, where the facility is placed and where a lot of the PV markets sit. And, huge escalations of rates, some by, if we had one that went up by 11,000%, very hard to explain to your client. But there was a lot of correction. I don't think that the rates will ever go back to anywhere near where they were before.
I noted to her that those steep rises were used to recoup claims costs that in some cases outweighed decades' worth of premiums.
Yeah, no, absolutely. So, payback for the reinsurers, a lot of the PV markets sort of curtailed their capacity almost immediately, and a couple exited the PV market altogether. So I think it made the landscape very challenging. It certainly changed over the last 3 years in a way that you can access the business and place the business. And even now, it's still, unfortunately, that cover has become unaffordable for some of the smaller clients. When your PV policy has a higher rate than your assets policy, that makes it a bit challenging. And so what's happened to some clients, especially the smaller, not the large corporates, but the smaller clients, is that they have had to make a choice. They need the assets cover. Do we take a chance on the PV? Do we just use our Sasria limits up to the 500 million and almost take a chance beyond that and then see how we go? And I think that's the unfortunate side of it, is if it happens again, I don't think it would happen in the same way. I don't think the government would let it happen in the same way. I don't think large corporates would let it happen in the same way. But the smaller, the SME market and the small traders and those sort of the people who are probably more affected by it are also the ones that can't afford the cover.
And for the insureds, I asked about the lessons for those insured clients, such as chains of supermarket grocery shops that proved vulnerable during the riots.
I think what we did see is, and the large retail groups specifically, is the stores on the ground. They can almost lose the store on the ground. They can restock and, that's easy enough if you lose the stock out your stores. But what they have done is put a lot of protection around their distribution centres, their DCs. A lot of what the large retail groups do is logistics. So it's getting their stuff out quickly from the DCs to the stores. So you can almost lose a store and restock it within 24 hours. It's not ideal, but what you really want to protect is your distribution centre.
Right.
You don't want your distribution centre looted, burnt, attacked, anything. Your stores, yes, you'll have a level of protection and security and all of those things, but for a company that runs on logistics and moving stock as quickly as possible into your various places, that's what you need to protect.
One takeaway I really did take from the event at GAFE was that there were so many people talking about PV at this event. That's MGAs, brokers, facultative reinsurance brokers, underwriters, a lot of them based in London or in Dubai. So I asked Clara whether she thought this new onus on PV was a reflection of the times.
It probably is a sign of the times. There's definitely a lot more talk about PV than ever before, but I think that's on the back of events, worldwide events. You've got South Africa, obviously close to my heart, 2021, and then obviously Ukraine closely followed that, and now Israel. So I think the PV markets on a whole have taken a bit of a battering over the last 3 years. We've certainly seen that in the pricing and even the number of carriers that are now able to write it. So I think PV capacity is quite tricky at the moment, and therefore I think a lot more people are looking for solutions for their PV books.
Well, I hope you liked that interview. My thanks to Clara for being so generous with her time. And now it's time to hear about the second interviewee. Rafic Abi Saleh is Assistant Vice President of War and Terrorism at Liberty Specialty Markets, based in the Dubai International Financial Centre. Rafic was actually introduced to me through a PV broker at the same event as an essential contact for these lines of business in Middle East markets, and he didn't disappoint. He begins by describing his own route into underwriting PV business before we get into regional trends in the Middle East. My thanks to Rafic, and I hope you enjoy the interview.
I've been in the insurance industry for over 20 years now. To give you a short background, I'm half Polish, half Lebanese background. I started insurance in Lebanon, multi-lines, decided to leave to Dubai in 2007. Worked for an insurance company for a couple of years, then moved to the DIFC to join UIB as a reinsurance broker. And then I got approached by Liberty, and it's been now 9 years that I handle the PV book at Liberty, and I've been leading it for the past, I would say, 8 years. So we work as one global team. It's a global product line, a global product team, but each region has their head, and I would say has their people on the ground who are mostly from the region. They know the region, which helps a lot. So yes, I mainly deal with the MENA region, although this extends also to other parts of Africa. I would see a bit of European. And this is also, you get the assistance from other parts, other colleagues in different parts of the world, because we work in a way as one team. If my colleagues in London have a lead somewhere in, let's say, Lebanon, as an example, they would need my help. I'd be more than happy to help them. If I see something, let's say, in Slovenia, it'd be better to have them also help me out with this. So it works very well this way, but my main focus has been, yes, the MENA region.
You know, it's quite obvious walking around this event that there are a lot of people here who are involved in PV markets. We live in interesting times. So what's your perception of 2024 client interest and regional demand for PV products?
When I first started in 2015, there wasn't much awareness about the product in the region. You had the multinationals already had the awareness, but it wasn't something that everyone was looking to buy. But then as years progressed, I see that the number of quotes, the interest from clients, the interest from cedents, the interest from people all around has increased massively. If I was at a normal dinner talking to people about what I do, everyone would be, oh, this is something they've never heard of. Now, when you say I'm a terror underwriter, I do terrorism and political violence, they know that this sort of thing already exists. So it's not something that is out of this world. I could say that all of the regions, in a way, have all seen an increase in demand. The book in the MENA region has definitely grown.
What have been the waypoints along that time period where its demand has suddenly changed, or has it been more of a gradual evolution?
If you take the US, for example, it has always been a big terror market, although they don't have a lot of exposure, but it has been a big terror market. Our market didn't have the awareness, but it had loads of issues. The thing is, the issues are okay. You'd have country A, for example, with the issues today, but it'll be okay the next year. But suddenly country B is now to have their own issues. So it depends on the countries, but they're in a way, you talk about Lebanon, they have a couple of good years and then things go bad. You have, let's say, Turkey, they have a couple of good years and then they have an event that, disturbs this monotone of calmness that, that like you start having waves and then you see a sudden surge. So each country had its surges of interest, which other than places like Dubai, for example, they have been very stable. The others, you'd see that they had their ups and downs. So together, if you add all of these, it has contributed to having an increase in the number of submissions and interest and players wanting to open in the region. Look at back in 2015, when in the DIFC market, I could say we were maybe 4 or 5 that were very active. And now there's easily, I would say, 10 markets in the DIFC that are very active. They have many skilled underwriters, and you can place massive business in the region without needing to go elsewhere now. Dubai is now a proper hub. It is not anymore somewhere where you use a bit of capacity and then you complement elsewhere. It is somewhere where you can complete most of the placements, I would say, unless it's something really mega.
This year, I think it's probably fair to say that risk perceptions amid current geopolitical events, risk perceptions are pretty high. But that's not the same as the claims environment. So is what's driving that demand more the perception of risk rather than actual recent PV claims within the region?
If you look at the past few years, I think the Ukraine conflict that is still ongoing has hardened the market. We were in a soft market. Yeah, we know that for years there were a certain number of claims in certain countries, but that was it. The rest were fairly claims-free, I would say. But after the Ukrainian conflict, a lot of businesses, and I would say people, saw that there is the potential of having a big claim is there. So nobody ever imagined that we'd have paratroopers falling in the middle of Kiev. If somebody told me this, I'd be like, this is something that can't happen. But then it did happen, and the result was big claims for the market. And there are events worldwide. We don't work as silos in a way, or certain claims in other parts of the world will affect your business indirectly. You will have, so for example, people say, I don't have a claim under my policy, but why is my premium increasing? If you look at claims in South America, you add the South African riots, add the events a bit here and there in Iraq, in different parts of the world, add the Ukrainian conflict to it, and I think you had also riots in the US. You add all of these together, you are getting claims in a way. So your cost is increasing, you're not making as much money as you're supposed to. And then people are starting to understand that, oh yeah, the PV market can get claims. And they're saying that if we get the sort of claims that we see like in Ukraine and other, this is devastating for businesses, so they need this protection.
Yeah, so was the invasion of Ukraine, a major milestone or a turning point in the development of the PV market?
This was the turning point. This is where everyone, in a way, most of the markets get hit. You got South American markets got hit in a way, then North American markets, then London markets, Middle Eastern markets. This is where everyone, in a way, got hit. And this had a very big effect on the reinsurance. So it's not a secret that the reinsurance, the retros of all our retros, it was very hard. They were very challenging, which is something that, in a way, the market was not used to. I would say that the Ukrainian conflict did have a big effect and has also hardened the market, I would say, for the past 2 years. I would say worldwide in a way. In some places more than others, but it's not anymore the reductions you've been seeing, let's say from 2015 up to, let's say, 2019, where it was a very soft market.
Mm. And in this part of the world, in your backyard, in the MENA, what are clients seeking, prioritizing when they come looking for a PV quote?
It depends on the type of client. So you have the multinationals will have the budgets, I would assume. Initially, most people treated the PV line as in you buy property damage, your building gets hit, and you get business interruption with it, thinking that that's it. I've got a factory and I produce certain items. My building gets hit, I'm covered. My BI gets hit, I'm covered. However, we've seen that claims have risen out of CBI, contingent business interruption, which can come out of suppliers and customers. So let's say you're producing phones, but you get your covers from a certain country. This certain country gets hit and can't export these items to you, these covers. You can't produce your phone anymore. You're on hold here. So due to an insured peril, your production has stopped. So this supplier got hit, you got stopped. People know much more about this and they're requiring it much more. So in a way, you start asking, where are these suppliers from? Are they all from Europe? Are they from Africa, from the Middle East? Are they from the same country? So you can also evaluate the risk. This is very common these days. You're seeing a much higher demand for denial of access. These are the extensions. So our product is divided into three main lines. You either buy sabotage and terrorism, or S&T with the SRCC part, or the full political violence and war. These are the main headers. Then you've got the extensions. And if you compare the last couple of years compared to 10 years ago, I would say that now people are more aware and seeking more of these extensions. They want these extensions more. It's not enough just, okay, I've got the PD, I got the block covered, the stones, and I've got my BI covered on their own. No, I need denial of access. My neighbor might be the danger, not me, because I've got a socks factory. What danger? Who wants to blow me up, or who wants to hit me? Well, who's your neighbor? Who's in your vicinity?
When the client wants, more of a risk management steer rather than just a transaction.
Yeah.
Is that more of an issue for the brokers than underwriters like yourself?
Yes. The thing is, when we get submissions, you can discuss with brokers. What do you think of this? What do you think of that? How can we improve for a client, his cover? But it is usually up to brokers and the risk managers of the clients, the direct clients, their own, to discuss what is it they need. So they have initial feedback that they give to the brokers. This is where the broker's expertise comes in, and tell them this is what you need, this is what you don't need. Why do you have a volcano extension under a PV policy? You don't need that. So this is where the broker comes in and does his job. And you need these brokers because they know what they're doing. They've been doing it for the past God knows how many years. So they can steer direct client, but we cannot come in and tell brokers, don't do this, don't do that. It is not our job. Our job is just to evaluate the risk and give them the support that they need based on what they ask for.
Thanks for listening, and I hope these two conversations gave you some useful insights. Please tune in next time for a war risk episode focused on the Red Sea crisis. I've been your host, David Benyon, and I'd like to thank my guests for this episode, Carla Jordan and Rafic Abi Saleh. Production was by Peter McGill, and Lawrence Durkin provided the music.